So why have they considered a rate hike when we are also talking about a crisis in the US financial sector? Well, I think the messaging is very simple, that the tools to fight inflation are separate and the US financial system can digest a 25 bips rate hike. So I look at the optimistic bullish part here, and the bullish part here is that in terms of signaling, the Fed remains absolutely clear and certain in terms of their messaging that the US financial system can digest this rate hike. That's one. B, markets meanwhile, well, you can argue back and say that in the near term, if interest rates are nearing their peak, then why markets, and why is that we've not seen a big flare up in equities, high growth stocks, emerging markets? That's largely because Fed has also indicated that in the near term, the mess in US financial sector will lead to a contraction in growth. So you're dealing with a patch where inflation is high and growth will be hunkered down, and that could lead to some change in estimates. So the setting on the table is the Fed event has come and gone. It's more like a no event, nothing new, nothing disturbing, and more an endorsement of the obvious that the Fed will use their tools in order to stem this entire US banking crisis, so to speak. So it's turning out to be no event on expected lines, no new tone in terms of messaging, and when everything is on expected lines and when there is no surprise, markets would say it's time to move on. That's
Yeah.
आगे बढ़ो.